Let's talk about investment strategies. Hi guys, I hope everyone is having a great day. Just want to quickly jump onto this video and just to tell you guys about the strategies that we're doing with property investments and why I think it's a good idea to always review your strategies from time to time because of how the market changes. And as you know, if things change, we need to adapt to the situation. So here are 3 strategies that I am personally focused on and hopefully gives you guys a bit of insight into the advantages or disadvantages of each strategy and why I'm doing it. So yeah, for those that you know, I've been a property investor for quite some time and my strategy has always been focused on HMOs. So I've specialised in HMOs in the beginning purely because of the cash flow that it gives you, and it's always been a cash flow strategy since the very beginning. So I specialised in HMOs and I do both students and working professionals in my area and have done for quite some time now. And I also had a letting agency at one point, which also managed and gave me a lot of experience and a lot of knowledge in terms of management of HMOs. So it's quite a bit there that I already know. But with the changes in the market, like I said in the beginning, we have to adapt to our environment, and often, sometimes strategies change. And of course, as you kind of get more experience with properties as well, you tend to naturally progress to the next level. So the 3 strategies that I'm working on and focused on right now when it's centering my portfolio or my investments. The first one is service accommodation. Now, this strategy has been around for few years now, and I think it's only really been popular in the past few years, and it's a strategy where I've always had an interest in, and looking from outside in, from an outside perspective, has seen the potentials of it being a really good strategy. I think the reason why I haven't done this strategy until recently was the opportunity wasn't quite there yet, and I also wanted to make sure that there's a market there that really sustained it. So for the first few years, I didn't take advantage of the first movers advantage, as they call it, and just waited to see that there is a market there to sustain it. With service accommodation, the reason why I am doing it is because, again, it's cash flow, but it's different kind of cash flow in terms of comparing to HMOs, which is what I'm used to. So I think, as everyone know, right now, the mortgage situation and utility situation, those that operate in the HMO spaces would, if they're honest with themselves, know that a lot of the margins are being squeezed quite heavily, especially for those that are coming off fixed term mortgages, which back then might have been 3%, 2 something or 3%, and getting a shock with the new rates, and certainly I have with my most recent refinance being done, which is a massive win for me, but now I'm stuck at a rate of around 6.5%, which is a lot higher than what I was previously, and which means my mortgage has more than doubled in terms of what it was previously. So with that, how can we mitigate that is to change up strategies, and the service accommodation strategy is one that I'm really interested in because the numbers are also different when it comes to stacking the deal. So it's a completely different model. It's not a one-to-one where you can take a HMO property that's been adapted to a HMO and then throw it in as a service accommodation, because the needs of the guests essentially is quite different and the costs are also different. So if you were to work out that strategy in your area, you might find that there might be differences in renovation styles or the amount of amenities that you might need. In my area, what I find is that for service accommodations, you really don't need en suites, which is what HMOs are different when it comes to the needs of the tenants. With service accommodation, the guests, obviously they're guests, so they to stay for short term, and one advantage of it is they don't have ASTs, and they're not under the tenancy laws as well. Another advantage for service accommodation as well that I really like and want to exploit more is that the fact that guests, they pay upfront when it comes to not even rents, but when it comes to the rent as it is to stay in your service accommodation. They pay upfront, so you don't have the issue with cash flow which you get all in the beginning. It just comes down to you to manage that cash flow situation. But on the negative side of things, or the con side of things, service accommodation, you do need to manage it quite heavily, and the management, the turnover, the systems is completely different from a HMO. Or you could use a management agent, one that specializes in service accommodation management, but again, you're going to have to be paying management fees for that, which could be quite high depending on who you use and where they are and the level of service that they provide, so just keep that in mind. So there's one strategy that I really recommend, and definitely on my side I'm going to be doing more of. The second strategy that I've always been doing, but I want to be scaling more nowadays, is the commercial to residential strategy. Now with this strategy, what's really good about it is you tend to be buying commercial properties that are actually a bit bigger than, or quite a bit bigger if you're comparing with terrace houses. But when it comes to the pound per square foot, you actually should be getting a lot more value for money. So let's say a residential property that needs renovation works, you might be buying at a rate of, I don't know, £70 a square foot if it does need renovation. Whereas for commercial unit, you might be buying it for a lot lower, let's say 30, 35. So that's half the price for the surface area that you're going to get, which means that when you do the conversion, you get a bit more bang for your buck, as they say. So I think the rates, you know, it'd be a good idea to look at your areas to see what kind of rates you are getting in comparison to full resi. But the fact that you can take a commercial property, change it to residential, uplift on the valuation when you do it, you then can potentially pull out a lot more of your initial capital, if not all of it, if done correctly. So there is a lot of margin when it comes to commercial property, especially commercial to resi, and once it's done you can do different strategies with it as well. So let's say you take a commercial block and you convert it into single apartments, you can then rent it out individually, or you've also got other strategies like social housing, which might increase the cash flow more if that's more you want. So obviously there's a lot more details that you need to do, such as due diligence and look into it, but again, commercial to resi all day long is a strategy that, you know, we specialize in as well and focus on at the moment. And finally, the first strategy that I would recommend people look into is doing flips and capital strategy. So flips are really good, and for us, the market that we are actually targeting, which is a bit different, is more of the high-end market. So we are wanting to do flips that are, rather than flipping a property like a terrace house, you might be making 20k or 30k on a flip. For us, we want to really be targeting the higher end of the market where there's a lot more margin. So for us, our criteria is if we're going to flip something, we want to be making at least 200k in terms of margin to make it worthwhile, which means that usually the properties that you need to buy will be a lot higher value to add that value on top of it. But the end result is you're spending a lot of time doing all these renovations anyway. You might as well make a better profit out of it, and that's logic for us, is that if we're going to do flips, we're going to go big or go home, and then that would also give us a bit more buffer when it comes to using angel finance, and a lot more security and de-risking the investment itself. So even if things go wrong, there's a bit of a buffer there to cover, whereas if you do small flips, then the margin is a lot lower and you're less security there. So, but yeah, what do you guys think? What kind of strategies are you doing as well, and what kind of strategies are you specializing in at this point in time in this current market? It'll be good to get your feedback as always, and I'm keen to learn if there's any other unique or niche strategy that you guys are deploying during these current times in the investment market. So as always, leave a message in the comments, give me some feedback. If you like this, please like or share, and as always, I will see you guys soon.